Hi guys, welcome back to my YouTube channel. And if you're still new in my YouTube channel, make sure that you subscribe, like the video, and share it with your friends. So on today's video, I'm going to be analyzing the market. So meaning I'm analyzing the DXY, meaning the dollar index. Then I'll be getting the direction for other currency pairs that are linked to the DXY. So as you can see, I'm just gonna focus um on the current market price, as I can see that the trend, it's a downtrend. As you can see, we've been breaking our previous higher lows. Now we are creating new lower lows. So okay, the way I like to analyze the simplest way, and it's effective. Okay, as you can see, I'm just gonna try and plot my support and resistance quickly so that you guys can see what I'm talking about. So as you can see here, we are having our doji. Right there on the current market price. And remember, every time when I say that, okay, with a Fibonacci on my 50 and 61.8 level, I'm looking for reversal candlesticks, reversal chart patterns. So what I'm gonna be doing now, I'm just gonna be showing you guys that you can trade with the Fibonacci only, but you need to understand how to properly use that Fibonacci. Okay, remember what I said? You check for your what? Your higher highs and higher lows, lower lows and lower highs. So as you can see, this low was broken at this area. Was broken where? Was broken at this particular area. So meaning we are still in a what? In a downtrend for the DXY. So meaning now, what do? We start our Fibonacci from where? Our previous higher, lower, we start our Fibonacci from our previous lower high, which is this point, to our current lower low, which is what? Which is this point. Then after doing that, we are going to select our 50 and 61.8 level. That's where we do what? That's where we get our reversals or rejections. We are on the daily chart. Now we move to the 4 hours and check what's really happening on our 50 and 61.8 level. On our 50 and 61.8 level, let's just make our Fibonacci a little bit smaller so that we can have a clear view of the market. So I hope you guys are understanding and you are learning a lot from the way I trade my Fibonacci. So now, as you can see, we having a what? A higher high, or a high, a low that was formed, a lower high, a lower low, and a lower high. Then what's next after this? So you always have to be steps ahead of the market. You have to be steps ahead of the market. And looking at our previous market, or where the market was turning, we can see that we had a what? We had a support and resistance around those areas. We had a support or resistance around those areas. So meaning around here, if the market decides to do what? To drop, we might be having a double top, double bottom going to the upside, or it can create a what? An head and shoulder. It can create a what? A head and shoulder to continue going to the downside and creating a what? A new lower low. So you always have to have those what? Those possibilities in the market. But now let's continue to do what? Let's continue to analyze. So meaning now, remember on the daily chart, we're having a doji, and a doji is a form of a reversal. Okay, it's fine. Then now you can add what other tools that can help you to determine what's happening in the market. So now, as you can see, it's what we call sorry about that, it's what we call the nature theory of the market. So meaning the nature theory of the market states that the market moves in phases of what? Of impulse, correction, and impulse. So meaning now we are in a what? We are in an impulse, correction, impulse, correction, then what's next? An impulse. That's how the market moves. But we need to dive deeper into the market and understand what the market is telling us. You see, then now we can do what? We can start removing our what? Okay, we might just need the upper trend line for now. We might just need the upper trend line for now. So what we can do for now is, okay, it's fine like this. We do what? We focus on the current market price. We focus on the current market price now. That, okay, around this what? Around this area, we had a what? We had a rejection. And on that rejection, even going on our left side, we are having a what? A rejection. So what are the possibilities? The possibilities can be, okay, if we go on lower time frames, if we go on lower time frames, we might just experience a what? A head and shoulder forming. And remember, you have to understand that the market can also give you in that corrective channel that we are having on the bigger time frame, we might be having an uptrend. As you can see here, we are having a what? An impulse, correction, impulse. But now what's happening here? We are having a very dominant dominant candlestick, which is a doji, whereby you can see that now the market doesn't have power to actually push the price to the upside. It will rather do what? It will rather drop a bit so that it can have more power. So now if we look the overall direction of the DXY, it will tell us that, okay, sorry about that, we are in a what? We are in a downtrend. So meaning any pair that starts with a USD will be following the dollar index. Then now what do? We go to our currency pairs. We go to our currency pairs and see if indeed they do correlate. We have to check if they do correlate. What can we do to actually capitalize from what we are having from the market? You see, basically check what's happening in the market, then we can capitalize from that. You check. So now from here, we can just put your trend line from here to there. You can see that you are having a 1, 2, 3 wave structure, of which even if the market can decide to come back down, it will come and retest a double bottom around this area. So now as we are having a direction on the what? On the bigger time frame as a what? As an uptrend, because we are experiencing new what? New higher highs that are being formed. New higher highs that are being formed. Of which, what's the next area to go? We are going to the upside to create another what? Another new higher high around those areas. You check. So that's how you actually anticipate what's happening in the market. But for now, let's do what? Let's move to the current market price and see what's basically happening. And you can see that, okay, we are having what we call a market or the nature theory of the market, as I explained on the dollar index. Remember, the nature theory on the dollar index was a what? Was a downtrend. Here we are having a what? A nature theory going to the upside. Impulse, correction, impulse, correction, impulse going to the upside. You see, so now the DXY is negatively correlating with each other, because the one USD, Euro USD, it's on the right, and another one, it starts with the USD. So now let's do what? Now let's dive deeper into the market. What could potentially happen when the market opens on Monday? What we're going to look for? We're going to look for a possible retest of our what? Possible retest of our neckline there. And how do we get a possible what? How do we get a possible retest of where the market will do what? Where the market will turn. We'll just do something of which is like that. And remember, I placed my what? My neckline first. Then after I placed my what? My Fibonacci. So meaning you can see, I already see where the market is going to turn. So meaning now I'm going to be waiting for the market to be around this area to the upside. That's what I'm going to be waiting for. I'm going to be waiting for the market to come and test my what? And test my 50 and 61.8 level before going to the upside. And I'll be having a 1 to 10. So meaning I'm risking 1% of my account to get 10%. You know, so I just want to show you how everything correlates with each other. Let's do what now? Let's check AUD/USD. Let's check AUD/USD. So now what's happening on AUD/USD? Let's go on the daily chart and see what's happening. So now, as you can see, AUD/USD has been ranging for the longest time now. Has been ranging for the longest time. As you can see, there is no clear direction of where the market is going on AUD/USD. But remember, you always have to adjust to how the market is moving. So by you adjusting is by you understanding how the market moves, and you don't have to worry about what happened in the past. So now, as you can see, even though it wasn't moving nicely, we're having an impulse, correction, impulse, then correction. This one is a deeper correction, you see. So meaning now, what am I gonna be doing? I can just go to my 2-hour. Based on the knowledge that I have on my what? On my DXY, I'll decide that, okay, around this area, the market might decide to come and test at this area. Remember, this one, AUD/USD, is moving slowly. So the market can decide to come to this area and form a double bottom before going up. You see, before going up. And I'll be having something of which it will be something like that. So meaning after here, it will come, test here, then it will retest and go to the upside. So this is how you should be able to understand properly about currency pairs, you know. So meaning you always have to understand the DXY, how it moves. After understanding how it moves, or after anticipating how it will move in the next coming week, then you will understand what will be happening in the currency side of the market. So now I already know that, okay, USD ZAR or USDJPY will be going to the downside, because that pair starts with what? That pair starts with the USD, and meaning Euro USD, GBP USD, AUD USD will be going where? It will be going to the upside because it's negatively correlating with what? With the DXY, with USDJPY, with USD So remember, we have what we call positive and negative correlation. But for now, let me just end the video. I'll be back with I'll be talking more about correlation, how to actually use correlation to your advantage. So yeah, guys, don't forget to like and subscribe and comment down below if you find my videos adding value to your trading journey. Don't forget, guys, let's grow the channel. Let's make sure that we share the videos with other fellow traders, and dango.